What a week we had in the land of interest rates. We saw the Federal Reserve cut its Fed funds rate this Wednesday by 50 basis points. Fed President Jerome Powell stated, and I quote, "We believe with an appropriate calibration of policy, we can see our economy growing." Translation? They have entered into a cutting cycle, meaning more rate cuts are on the horizon. According to their dot plot chart, the Fed members believe that there is room to cut another 50 basis points before the end of this year. You can see that their midpoint projections for 2024 sitting at 4 3/8, which would mean another 50 basis point cut before the end of the year. They have 2 more meetings left this year, one in November and one in December. Maybe it will be a 25 basis point cut at each meeting. Additionally, the midpoint projections for 2025 is 3 3/8, which would mean another 100 basis point cut next year. So how does this impact mortgage rates? Well, as you can see from this 30-year fixed rate mortgage chart, mortgage rates actually got a little bit worse after the Fed rate cut was announced. So what gives? Well, listen to Fed President Jerome Powell's answer to ABC's news reporter's question about mortgage rates.
Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, that'll depend on how the economy evolves.
He's basically explaining that the Fed does not control long-term mortgage rates, and that mortgage rate movement depends on how the economy evolves. He's right. Mortgage rates are based on how the mortgage bond market trades. Moving forward, these mortgage bonds will be most impacted by 2 economic indicators: the BLS jobs report and the personal consumption expenditure inflation index. Weakening in the job sector and or slowing down in the pace of inflation could both and will both bring long-term mortgage interest rates down even more. Good news for our buyers is that we've made some really nice progress in mortgage rates recently. As you know, they've come down 1 3/8 over the past 4 months. As of today, September the 20th, the average 30-year fixed rate mortgage closed at 6.15% according to the Mortgage Daily Rate Index. If you like this video, subscribe to my YouTube channel or follow me on my Instagram.